So we are blessed that we can hear you and we can interact with you for another 45 minutes an hour.
1 hour you have said, so I'll keep boring for 1 hour.
No, sir. So you can see on screen my students are there, sir.
Yes.
Shobit and Pranjali are the anchors, the moderator for the event. The students sitting in the classroom, this is my auditorium and all my first year batch is sitting there. We have faculty members who have joined us, staff members who have joined us.
So will you be later putting it for wider audience to talk?
Yes, sir. Yes, sir. Yes,
the whole thing.
Yes, sir. So
it's very important. You know why we are tempted to speak? We are tempted to speak because an authoritative voice is needed from the university, which is independent, like yours, and from people who are retired and they don't bother. Of course, we'll be courteous, decent, and it's very important in this sector.
True.
To speak the truth. Keep close to truth. I mean, not speak the truth.
Yes, sir. And we are recording this session as discussed. You said that we need to record. We are recording it.
Yes. And I'm aware of your reputation, which is excellent. Institutions' recommendation, your colleagues, some of them which I have learned. Proud of you. Ultimately, future is with you people only.
Thank you, sir. These words means a lot to the institute, to the university.
No, I'm sincere. I wouldn't have spoken had it not been true. I would have kept quiet. So it is. And even here in the RBI, you mentioned Symbiosis. Everybody knows. So no further questions.
True. So
I'm in Bhubaneswar. Yes, I'm in Bhubaneswar for a day.
Yeah.
And tomorrow I'll be going to Kolkata. I'll be staying in Kolkata for till 2nd. There in the Department of Economics also, there's a meeting, Sustainable Development.
Okay. Fine. So would you like to share your screen and start the presentation, sir?
Yeah, I have no problem. We are all ready.
Yes, sir.
We would like to give an introduction.
Students.
Yes, ma'am. Now, welcome back to the last session before we announce the best paper. Now we have a valedictory speech given by Dr. Amitabh Ranjan. And the topic is
Rajan. Very important.
Sorry, sir. Dr. Amitabh Ranjan. The topic is Post-2008 Banking and Finance Emerging Trends. Dr. Amitabh Ranjan is an IAS officer of Maharashtra cadre and the former Home Secretary and Additional Chief Secretary of Maharashtra. During his long service tenure, Sir has served the Maharashtra state government in multiple positions from time to time, starting as a collector and district magistrate in Nanded to principal secretary and investment commissioner for the government of Maharashtra. Sir then moved on to take more responsibilities at Government of India. Post-retirement, Sir is now serving as the chairman of Reserve Bank of India and a member of Independent Committee on Stressed Asset at SBI. Sir, we welcome you for the conference. Could we have a huge round of applause for Sir? Well, now we ask you to move forward to our session.
Should I begin?
Yes, sir.
Yes, sir.
Friends, good evening.
Good evening.
You don't know how happy I am to be in the company of academicians and experts. The introduction which you have given is the outer fossil. Inside, there's an academic terrain. I have been a topper all along, and I picked up economic history as a domain. I did this in JNU, where I did my master's in financial history. This was in the year 1977. Immediately, I was required to teach in 2 central universities one by one. And I was teaching economic history there with emphasis on monetary economics. My PhD, which was much later, from the JNU, was on jurisprudence, law. So, and as you have mentioned, I was in finance all over. Thereafter, Reserve Bank of India, State Bank of India also has some assignment with me. And I've been speaking almost every 3 weeks. This time, when the proposal came to give a talk, and 1 hour talk, I thought I should deliver something which is of value. And the topic I've chosen is on banking and finance, of course, because the institution is of that. I've chosen an era which represents almost 21st century, because 21st century for others started on a particular date. We all know when it started, 21st century. But for those in banking and finance, the century really started in the year 2008. Why? There are 3 reasons for this. One is, we all know, global financial crisis. Global financial crisis came, it spread wide, it spread deep, and it has tectonic consequences for the economy in terms of business cycle movements. A famous book which you used to read earlier on crisis and history, that book reminded us that crises keep on coming. They will come again. They had come in 2029. Smaller crises are always there. Now the question is, this crisis was important for a different reasons. Not only it created problems in employment, underemployment, and various other things, even nations were shaken. What happened really, the presumptions and assumptions of economics also changed. If you remember, 80s, Stiglitz called a roaring 80s. There's a book on that. Because neoliberal precept started coming up. Keynesian economics had a downturn. Keynes, who was so much of a part of the solution during 20s, 30s, and so on, till his life. Later on, when stagflation started coming up, his theories became unimportant to the people, mostly. They were not. And came a philosophy of von Hayek, Friedrich Hayek. Friedrich Hayek was a conservative, brilliant, but often wrong, in my opinion. And he created a situation in which he said that markets are fundamental. Markets are spontaneous. Markets are creative. Therefore, don't even touch the market. And when it came on the issues of state versus market, he said state should not interfere at all. And even if it does, it should be a feather touch regulation. And politically, it kept a popular attraction in UK, when Margaret Thatcher was there, and in US, when Bush had a regime. Short point in one sentence is this: 2008 marks the decline of the neoliberal approaches to monetary policy and advice. And it exposed that regulation all over is needed, whether with what characteristics, but definitely it is required. And what is the proof? 2 types of proof. The books which started coming post-2008 global financial crisis, particularly of Joseph Stiglitz, Nobel laureate, brilliant person, it had a combination of Keynes and monetarists. So we are today in a situation, one, in which regulation is accepted. It is no more a question. What is the proof of it? The proof of it, you see the recent market developments. When again we have a bad crunch all over. Look at the reaction of the Fed of USA. Look at the regulatory policies of Japan. And also the major European countries are now following a different approach where regulation is not questioned. What is questioned is the type of regulation. Because objectively, we must realize that not only market fails at times, even the state fails. So when we say market failure, objectively, wisdom says that state failures also have to be highlighted. The state has to be entrepreneurial. And that's why there are books and books in Europe now. If you visit any university, and also advanced Ivy League countries in UK, G20 meetings you attend, you find that the talk of entrepreneurial state. My request to the students and researchers would be to please refer to the concept of entrepreneurial state. It's a new concept. It was floated in the year 2015. It takes wisdom from economic theory, recent economic theory. And one more thing I would like to say, the recent economic theory does not disregard classical economists like Adam Smith. Adam Smith has been reinterpreted. His two books are studied together now, not just an inquiry into the wealth of nations, but also on moral sentiments, markets and sentiment. That book which he wrote is equally important. And they are read together now. So Adam Smith is getting a different requirement. Keynes also has now a little changed nuance for us. His policies are interpreted in neo-Keynesian framework, and the number of books coming out on this. Third area, which is coming up, is on Marx as well. Marx is getting taken seriously, particularly in labor economics, on transitions in the economy, in the eve of new technology. Short point again, therefore, is that political economy, the economics part, is getting reassessed and re-examined. All this has an impact on banking or finance of our generation today. Next. When corporates do not work properly, boards do not work properly, it has been found that corporate reforms are suggested. Take the example of India's Companies Act 2013. It is the best document today in the world which has taken lessons from all good countries and is also at the same time evidence-based. So the board theoretical liabilities and responsibilities now are different. Not that in banking and finance sector, particularly in banking sector, boards are behaving very well, but by and large, the vigil on them is quite getting stringent. I'll now come to 12 points which I want to highlight here, and I'll be very brief. I will not be giving controversies. I'll be only making the conclusion, the points on conclusion on which you can debate further. First of all, let's start with the basic philosophical question. How do we conceptualize organized life? This is the part of slide 1, which I am putting before you. Just reflect on the 4 items which are given there. It is called conceptualizing organized life, and I have talked of 4 things. They will be relevant not only for banking, not only for finance, but also for this post-2008 era, particularly for today. Structures. We all work within structures. Structures of what? Structure of the capitalism. capitalism have been accepted now. That debate is no more there, really, in most of us. Question is, what is the nature of capitalism which creates risks? And the first point is, and the only point I would like to highlight here, I'm not going to give a lecture on capitalism. What I'm going to highlight for the banks and banking sector is this, that nature of capitalism is that it is a fragile structure. The studies which have happened have always suggested that crises and problems are going to come off and on. And therefore, lesson is that structurally regulation is required. I'll come to the question, what type of regulation? Second is, we don't only deal with structures, we also deal with functions. When we talk of management sciences and studies, basically it is the study of functions. And most utilitarian view is the functional view of things. Otherwise, we'll be only talking about dreams, interpreting things, criticizing structures. Functionally, there's a problem. There are interests and there are dynamics. What are interests? The greatest philosopher in the world today is Zugran Habermas. In his early days, he wrote an excellent, important book. It is called Knowledge and Self-Interest. Problem is that knowledge creation, which is done by academicians, by the policy maker, by the governments through their announcements, public sphere widely, is a mixed thing. I'll give an example to illustrate it. For example, blockchain technology. Blockchain came in 2008, and there was a lot of hope when the paper came, unanimous paper on blockchain in the year 2008. We all thought it is a liberty document, basically, because they talk of decentralization, which is a solution of many problems. It talks of foolproof security, tremendous speed, exponential applications, and therefore blockchain revolution is the revolution. And Tapscott, who wrote a book on it, the most popular book, is called The Blockchain Revolution. Now, he wrote the book in 2015. Today, how do we assess Tapscott? We realize that in the name of blockchain technology, which is foundational as essential and we'll all recommend it, the cryptomania has come up in the meanwhile. Crypto, so-called currency, they're not currencies, but it was called like this. An entire dark side of the web, FATF concern, Financial Action Task Force concerns, they started coming up. As a result, FATF was requested by the G20 heads of state, including India's, to produce a report on the implications of fintech in the blockchain situation, particularly with crypto flows. And therefore, a full-fledged report has gone. Friends, I want to tell you one thing. Today is the date on which we are seeing hope even in the area of foundational technology like blockchain. Blockchain is not equal to cryptocurrencies or crypto methods. New methods have evolved in 2013. Researchers have come up which will encourage you to start CBDCs, central bank digital currencies. Do you not remember that very recently, in this budget speech, the Union Finance Minister of India wrote 2 paragraphs in her speech. One paragraph was that India shall have in this year itself CBDC, central bank digital currency. And second announcement was on crypto assets. The question came up, how will India tackle crypto assets? Because they are there. Will it be no tax? Will it be moderate tax? But India ultimately decided to cut the whole debate first. I'll summarize that it shall have 30% tax on it. So we have not banned it, India. What we have done is to keep the taxes lower, but merely making announcement doesn't matter, as you know. The finance ministry has to issue circulars. They have issued circulars and tax authorities are trying to look into it. So the thing is on. So this time when the returns will be filed in the Department of Revenue, where I was for quite some time, they will have to comply with these assets. So India is experimenting. Friends, good news again is not only India's announcement. 7 days after India's announcement, US Fed also decided that they will have the CBDC. Now, details are needed to tell what form, where, and how. The time is not there, but they have also given. And US gives a currency market signal. It's good for the country. More important, what I know, that behind the curtain, efforts are going to happen in G20 meetings, in which India is going to head as presidency from this year. So a lot of background work is getting done. 60 countries are trying to have blockchain analysis, regulation, and so on. And a lot of things are in the pipeline. They are not announced. They will be announced slowly when there is because in cross-border flows, you also have to have international consensus. Merely regulating things will not happen unless it is a worldwide view. So short point I was mentioning, the structures are there, functions are there, interests are there. Habermas in his letters, in his paper said that there are 3 types of interest. One is a technical interest. Technique in French means art of doing things, art of managing things, which management people usually do. All of us manage, and when we manage, whether it's a state, it's a regulator, it's an entity, it's anybody, that's a technical, not a derogatory word, but art of doing practical things. Second interest is profiteering. Remember one thing, that all over the globe now, there's a consensus that while profits are welcome, it's a part of economic function, profiteering shall not be done. Therefore, in US, you have heavy dose of antitrust regulation, and our competition law is also getting amended. So competition is required. But if you see in the digital context, there's a small problem. That problem is the big 9, Google, Microsoft, and so on, 2 in China. These are good institutions, but their business practices need to be observed properly. And if you are reading newspapers carefully in India, see how the parliamentary committee has called big guys on certain data issues, how US regulation also is very tough with regard to this. So competition will be required. Third type of interest are emancipatory interests about we in the university and we the citizens of India and the world are interested in. You are important as an institution because you will be the persons or a group of persons who will be seeing public interest at large. And therefore, the dynamics ultimately will depend on independent opinion. My regret has been that while in India, number of experts are there who know problems, but when the cases come up before the parliamentary committees, such issues, when cases come up in the Supreme Court of India for determination, independent voices are not coming up. So it will never be a solution unless people participate, or by people I knew, the younger generation, who are going to suffer. My second slide I'll run through quickly because ultimately I'll be respecting time discipline. Conceptualizing institutions. There's only one question. 4 I have listed. I will not be giving equal time. the institutions have to be autonomous. Reserve Bank of India has to be autonomous. SEBI has to be autonomous. I'm not saying they are not autonomous. I'm saying that the autonomy has to seep downwards in action. In fact, India has been doing very well as far as the relationship between state and regulation is concerned. But same thing is not happening in other countries. There's no point naming them. They're democratic countries, but the autonomies are in difficulty. Now, you all know, knowing the world, that it is a problem, and that problem has to be solved because somebody has to be quickly pointing out what is wrong. Otherwise, the whole domain will be left to journalists who merely summarize in economic and business and finance matters. They pick up reports, summarize, well, nothing. Or business interests who have their tools, they will propagate. Or confusion makers in the politics who will have their political end, the neutral end, and honest public opinion. That's why your institution becomes important. Third thing I have already mentioned, but I'll pick up one point here. This third slide is on conceptualizing the post-2008 era. Why do I say to post-2008 era? Because era is a period when new things have happened. And I have already mentioned the global financial crisis, fourth industrial revolution, these are new things. But important now, from our point of view, is the business cycles, disruptions, and fusion. Remember, we are dealing with fintech. When we deal with fintech, we must realize that financial technology is growing and there are disruptions. I'll explain what disruptions are in economic theory consequences. And there are also fusions. And those disturb and fusions are important. Let me come quickly to that point, which deals with and we have fourth slide. I'll skip over it and come to the fifth slide. Conceptualizing tech disruptions. Now, and ask anybody in computer sciences and computer activities. They will quickly telling you disruption without explaining what conceptually it means. We all know disruptions are violent disturbances. But economically, in economic theory and policy practice, that doesn't help anything. So let me spend a few words and come directly on an author who died year before last. He was a great mind. Some say he was the biggest mind for the 21st century, but 21st century has only seen few years. His name is Clayton M. Christensen. Friends, let me go back to economic theory briefly. In economic theory, nobody has dealt with technology properly except one person, Schumpeter. Joseph A. Schumpeter was the person who said and talked of the process of creative destruction. He says technology creates destruction issue vivers, but they ultimately lead to creation. I'll give an example, recent example to explain what Schumpeter has said in the 2008 context. Remember, global financial crisis came and blockchain emerged out of it. And the entire set of computer applications, whether it's all types, there was a revolution in that. So when new technology comes up, it's a positive thing. Now, business questions are different. All right, Schumpeter was right that there would be, whenever there is a turbulence, there is a problem, technology will keep throwing up ideas. Question is, what would company do? So Clayton M. Christensen wrote 3 books which are of importance. And these 6 books were the classics. They were written in 1997, 2003, and 2013. They talk about the DNA of innovative disruption. It's a theory. Earlier I had said, Schumpeter said, process of creative disruption. He just described as an observation. Christensen has given a theory of innovative disruption. Basically, what he was doing is something like Peter Drucker earlier. Peter Drucker talked of the vision of technological work structure. He used to study, observe companies and come to conclusions. Good thing about him is, Clayton Christensen, that he studied why big companies fail in reaping the benefits of technological advancement. And they're concrete case studies. And it shows that it requires a different DNA management-wise in the companies in which creativity has to be institutionally organized. So I would highlight that understanding technical disruptions are important. I used another word, fusion. Well, Bill Gates has articles in which he says, for example, recently, 2 years back, he's mentioned that what we all know, but we don't know the fusion part. Today, we are treating artificial intelligence and machine learning separately. We say how machine learning recognizes certain aspects. It's one stream of thought. Artificial intelligence is a different stream of thought. But scientists are working, and there's every likelihood that there will be a merger of these ideas in a muted form, and therefore fusions will take place. Now, this will have impact on the work strategies of companies, because today, if I'm expert of a particular branch of knowledge, and tomorrow there's a fusion with higher, something new, not A plus B, but something different, then my skill requirements, skill gaps will be much more. And therefore, this will create a challenge. So short point, therefore, are 2. We should be prepared for fusions. We should be prepared as management persons for also disruptions. These are good signals. There is nothing to get unduly worried about it. And management studies now in the Harvard Business School, if you see, most of the journal is full of such articles in which people discuss this aspect. When you go abroad, when you talk in international circuits, it will be presumed that you have read Clayton Christensen and many other things. It is a established theory. So understanding this will also help a big deal. I talked of friends. This is my 6th slide. I talked of the 4th industrial revolution. World Economic Forum, since 2015, is working on it. They first came out as a book, then other books in which they talked how policy-wise we should move in the direction of improvements. Friends, the conclusions are only 2. Remember that the 4th industrial revolution, of which there are 21 characteristics in technology, is at the initial stage, meaning thereby that as the time passes, in geometric progression, you will have more and more changes. So changes will move not in arithmetic progression now, in geometric progression. And therefore, all companies will require to have agility in their approach. And I'll soon deal with the issue of agility. I come to the next part in the same slide of the advantages of the situation which we are in technology and finance in two terms. When we talk of advantages and we talk of BFSI, banking, financial services, and insurance, we want to know what are the advantages. So many articles are written, but the brief points are only 5. What are the advantages of the new digital age today? And these advantages are: 1, it is agile. Try to find out what the concept of agility is. A lot has been written on. It is scalable beyond proportions. 2. 3, it is innovative in designing in a very big way. And integration is the sucking point of all the success. And ultimately, 5th, new digital era moves on analytics. You excel and capture market by analytics. So success points of the new age for the banking, financial services, and insurance, whether it is blockchain technology, whether it's robotics, any area, artificial intelligence, machine learning, all these have these advantages. Is there a drawback also of the new age which should worry us? We'll all live in this age. This is 2022. Why? What should be your worries? Advantages, fine. You will improve on the advantages. What are the worrying points? And this is the crux of the argument I want to give today. I've been speaking often, but I've not highlighted this point. It is very important to take care of 4 aspects, which is the last line of this slide 6. Reinvention is required. I kept on saying Christensen, not many times. His key area is you should have industrial organization, business organizations, which are seamless in reinvention. Now, reinvention, post-2008, common sense word is known. Reinvention, fine, what is there? No, it has to be conceptually read with a lot of literature behind it. That reinvention has to be incorporated management-wise into each cell and branches. I'll give you an example. A company decides to buy robotic software. So what will happen? The proposal will go to the board. Now, board will decide prudently which has to be purchased and when, because models abound. New models will be further there. And therefore, in-house capacity is required to ensure that the results, investments in the company are not vendor-driven. Because what vendors do, and it's happening in a big way in the third world countries particularly, advertisement comes. Proposals come, seminars are organized to give advantage of a product. What they will do, new tech, advantages are brilliantly explained, but by being business proposition, they will not reveal the shortcomings. So in the Harvard Business Circles, also elsewhere, study is on the why business models have failed, why products have failed, and the rate of technological failures is quite high. Therefore, in-house capacity is required, for which there has to be a reinvention. And for implementation, suppose it's a new team which is going to decide on the, maybe even government, may decide on the options available, technological options available in taking control of the foreign flows, illicit foreign flows in the market. It will require 3 experts at least, howsoever lean and small team it is. It will require the expert, domain expert in technology. But when it comes to contract matters, it will require a law-knowing person who will not be knowing coding of the new technology. Coding will be done by somebody else, and contract will be refined by somebody else. We talk of blockchain contracts very often. Insurance is very common. all over, and BSF advantage is also. And the third guy also will be there, who will be looking up the revenue side of the company. Now, team has to get together. Theoretically, we'll say, oh, all our brothers, sisters, no problem. But anybody who knows evidence-based experience, that teams are very difficult to work. The smart teams are there. High IQ teams are there. But cross-domain knowledge is often awfully defective. Advantage of an institution like yours would be to take out people who would also, in their approaches, work and ideology, will be working together. Respecting the other discipline is extremely important. You may not know the discipline fully. Like I may not be knowing teaching really, researching really, but at least I should be respectful to you. And that is the thing which everybody, so etiquette is equally important than the ethics. So I always say in lectures, ethics is there, should be there, law will catch you, norms are there, you will fail. But etiquette is very important. Even if you disagree, you should know how to disagree. And this new generation has a very good potential on that. As a generation, they are much better than us. So ego, hassles, cross-cutting. There was a brilliant article by Harold J. Lasky. I don't know younger generation understands or not. He was the director of the London School of Economics. He wrote Grammar of Politics. He was the teacher of Jawaharlal Nehru, for example, in LSE. He wrote a brilliant article. He's a political scientist. He wrote an article called Limitations of an Expert. He himself was an expert to the core. Harold Lasky, great mind. And what did he say? This article came out in Harper Review in the year 1929. It's on net. You can read Limitations of an Expert. He's mentioning to this point. He gave an example of an electric company. Suppose there's a power generation corporation, or there's a power complex, everybody, distribution, generation, and all that. An engineer who has become CEO and has worked all along the generation sector stream would think that adequate power generation, proper power generation, dynamic power generation is the most important thing. Again, another engineer, suppose he becomes CEO, is from distribution side, distribution of power networks. He will realize that T&D responsibility, difficulties, distribution is the main. So ethic-wise, you may take a position based on your discipline. Similarly, those who are doing coding will think, all right, I know coding of blockchain. What's the problem? But the law guy also has to, finance guy also has to. So this whole thing of putting together is important. Second word, about which I'm worried, one I have mentioned, reinvention, management reinvention. Second is re-engineering. We all have read somewhere since 1980s, business process re-engineering. Now, in the post-2008 scenario, this re-engineering has 5 fingers now. First, it was 1 thumb. It was 5 fingers now. It has become cross-disciplinary, interdisciplinary, and so on. So re-engineering an integrated view is required to be taken, unlike what we had in those days where things used to be merrily. So re-engineering, reinvention, these are. Another problem is the labor side, reskilling. Now, if I have one problem with the new paradigm in which we live, it is the labor. By labor, I do not mean laborer with a hammer or sickle. We are all labor. We can contribute to brain work. And in the economics, when it's a factor of production, you are a labor. And the question is, think of the advanced unfolding of the global 4th revolution, industrial revolution. They call IR 4.0. There, suppose robos come. Suppose blockchain advances in fruitful uses. It is going to happen. Then the skill sets which the top management has in technocracy will require those abilities. Now we'll say, all right, as the companies are saying, we'll train them short-term courses all over. You have not seen certificates which are being issued all over India in blockchain and machine learning and so on and so forth. And as the head of the interview, when I found them worth nothing because it's badly out of date and there's a limit to adult learning. 6 months, how can you master anything to be able to contribute? And even the persons who take you on job will very quickly realize that it's not really a thing. Therefore, and governments, not only India, all over, they will say, all right, we have skill development programs prepared by our technical institutions and so on and so forth. Now, the worth of that is also not anything. Short point, therefore, there is unemployment, there is underemployment, things are changing in the future of work is at stake everywhere. It has to be taken very seriously because if we pick up the brilliant guys, we do. But we have to train them for at least a 30-35 years career span in future. And somehow this aptitude of total learning has to be there, and there has to be support material on continuous reskilling. In the management sciences all over the world and Europe, people talk of reskilling, sick of that. International Labour Organization also says all the time, but really nothing is being done to ensure that in the career span of so many years, there will be reskill and ultimately thing. We even don't know ourselves what the trends are going to happen. Can you say what will be the digital future in the year 2025 even? Of course, we have a payments report on that from the Reserve Bank, vision, but vision and strategies are different. You can have vision, easy. But strategies will have to work out properly. And ultimately, fifth thing which worries is collaboration. We all had pandemic, COVID, chain management, business change management, supply side. They all got disrupted because it was formatted on the global world. Now, with such disruptions, such changes, it is very important to have the strategies of collaboration. For example, in India, startups are doing very well. This acknowledged we have. But it doesn't mean that they will be taking over banks. So what will be the module of collaboration between this and that? And therefore, that thing also becomes important. Next slide is more direct to the topic. Fintech intermediation in banking. Banking has a very favorable word for intermediation. We all mug up. But what is required is a Shabda Sadhana. You think of that word. What is intermediation? And apply it to fintech. Global concern today and cooperation also today in banking is on these 4 points, which I have mentioned in slide number 7, fintech intermediate banking. And I'll give you some examples, very brief examples on these 4 points. This is the crux of the matter as far as my lecture is concerned, because my only thing I have is the exposure, nothing else. Moving here and there, everywhere, and ultimately gathering ideas as a sincere citizen, not as an egoist expert. First thing which has happened, which you all know and teach, Bank for International Settlement. Story is very well known. The third Basel it is pronounced, we say Basel and whatever, is Basel, it's a town, and that pronunciation is Basel. Third Basel Accord What is an accord? I keep asking in the interview. An accord is an agreement which is implementable by consent. So when these three pillars in Basel III, three are mentioned, they have to be implemented. And they all were supposed to be implemented by the year 2018. But thanks to COVID, an excuse was found that, okay, COVID is there, so it'll extend. Actually, one thing we should realize that for nation building, problems are becoming tougher and tougher. The choices are becoming lesser and lesser. And if everything is left to the cabinet or to the parliamentary committees or to the boards, things will not happen. We require universities who will openly say yes or no. They don't have a vested interest, and that they will speak. And therefore, Basel Accord, a lot of work has been done by the Bank of International Settlements, and this it's part of the curriculum we all teach at the postgraduate level. Another thing which keeps coming in the news, we hear it, but don't really realize the implication. Only those who are inside know. I was enforcement director also of India. I know very well. FATF report. What is FATF? Financial Action Task Force. It was created by G7 in those days. And they said, look, cross-border flows, so many problems, terror finance, all that, and money laundering. So something has to be done. And two things were done. One is that Supreme Court is examining now laws regarding money laundering. They are being examined. And there's a global perspective to it. This is the FATF contribution. But one good thing has been done recently by FATF. Last year, they gave a report, end of last year, on blockchain regulation. And they say in fraud detection, what all can be done. It is on net, that report, FATF report. I have mentioned 2012. That was the initial report. Latest report of 2021 deals with the solution with regard to blockchain technology for global creation. G20, they have presented. And there's a global consensus that this is the way we should avoid the bad side, dark side of the web, and that's how we should course ahead we should take. Similarly, another thing which has been missed, particularly in India, is the Cornwall consensus. Cornwall is a city in UK. In the year 2021, G7 countries met and they resolved on the world order in terms of stability. And they rejected the Washington consensus. What was the Washington consensus in 90s early? It was same thing which Hayek was saying, don't touch regulation, leave markets. Those presumptions have been finally, globally endorsed in the year 2020 when just open the title Cornwall Consensus and you will find the documents which will immediately highlight you what to learn from it. So Cornwall Consensus is the global consensus now. It was even ratified by the G20 countries. So if one sentence I have to say, that it becomes a mandate. So old is dead. New approaches have been mentioned. It's a report for doing it. In fintech, Reserve Bank of India took a major decision this year, January, to open a department for fintech. And this has done many things, it shall do many things. Very few countries have regulators have in other countries, central banks have department, they have cells, they have units. A department, this department will do, apart from general things, two important things. It will give guidance to innovation with sandbox approach. Now, sandbox again is a concept which is not fully understood in India. People say sand, box, is it a children's play? No. Read the UK literature. UK was the first country, very recently, which has developed methodologies to analyze, classify, and agree on new experimental projects which require to be gone through by the regulatory arbitrage before they are released. So it is a collaboration, good of mind between a regulator who is also supposed to listen to people, entities, and companies which are thinking afresh, is thinking together. And if you see the UK, India is they have done 4 cohorts and all, that's news. These questions are always there. Topics are also properly selected. But if you really want to understand how sandbox regime works on fintech, it is the UK experience. Please go through this document. They're all open. And they will tell you how over 5 years, these things have been tried there. Now, India has not only studied these, we're not looking into Europe and other countries of Europe or even USA. It's advanced learning. There's no point to reinvent the wheel again if some country has done. Same methods can be utilized there. And with India's talent and levels of democracy and the control of people's power here, discourse ethic will work and things will work out. Second thing which the Reserve Bank is mandated to do under its fintech department is, I have already spoken, CBDC. Well, nothing is being announced really for citizens or academicians and people outside, but inside works are being done. But a good work on this of the global situation, whether it is China, whether it's Venezuela or it's any other countries, is by an Indian American, Ishwar Prasad. Ishwar Prasad is in US, and he has written a book which is available in India. It's a must read. It's called The Future of Money. Future of Money is the book which came this year. It's a bulky book. And if you don't read, it's like not reading Adam Smith. Of course, many guys don't read. They only read the summary. But Hawkins, for example. So originals have to be read. But Ishwar Prasad is the book which will tell you how it is. And most people agree with him. So if you say fintech is a study in progress, 60 countries are trying, what exactly is there? So fintech is intermediation is very important in banking, and a lot of things are being done. I'll come to the 8th slide. I'll finish exactly at 5 o'clock, which deals with IR 4.0 based business models in banking. Now, this is the meat of management institution, business model banking, and Harvard publications are also tell you innovations in business models. Now here, a socialist vision is also required, pro-people. The approaches in the world are turning in a different direction. I'll take up. When we say business models, banking, for example, what should a good business model aim at? The immediate answer would be viability, revenue stream coming up, correct? Nobody will say no to this. But as you know, business model after IR 4.0 have also gone to splits. So if I am having a business model for incorporation in the state bank of face recognition and machine learning, then my model today will be costly. But next year, with newer versions, and if I've decided to invest it, the model will have different parameters. And all models have to be operationally good. I'll give you an example, very simple example for bank. State Bank of India. You are a customer. You are a clerk in a company. You want some returns to be given to you before filing income tax. Go there and see how much time it takes. Reason is not that it's a bunch of insincere people on the counter. Maybe a few, but not as a whole. They are sincere, dedicated, modern. Problem is that the capacity is not there. If you have to work on very small capacity of delivery units, which is basically the computer and laptop or whatever, then ultimately the outcome. So telecommunication revolution is also needed. We walk on two legs in business model. One will be infrastructure. For example, 5G is coming up. I'm glad that tenders have been almost at a very advanced stage and processes will be also cut. And by October, as the minister has promised, things will happen. That's a good sign. No scandal so far. So it's all good. 5G. But 5G, its infusion into the banking structure at the counter level, lowest level, is of essence. This is a very simple statement type thing. But imagine incorporating blockchain and insurance. Contract management would be very easy if it is blockchain. And it's possible. But again, the re-engineering of persons around, capacity building in terms of infrastructure becomes important. So business model innovation have to be simultaneous with the technological innovation, and they should always have the consumer focus, and consumer here means the person at the end, bottom of the pyramid. Because inclusion policy, which is all dear to us, will also depend on that. On inclusion, I'm suddenly reminded by something good which has been done by the World Bank. And I don't know why the analysts of India are not picking it up. You know, we have said that financial inclusion is necessary, and sentimental statements are there already. Crux of the matter is, how are you actually doing depends what parameters on which you will be judged and what will be the statistical method to test this. I'll draw your attention to a concept called Global Index Database of the World Bank. When I go to other countries, and when people talk of this, I realize why in India we don't discuss this. So particularly to young children who are just starting and coming up, so latest report is Global Index, they say, Database 2021. It takes care of the whole year. It was issued in August. It is on net. No money. What we have to read is the methodology of computing statistics. And your institution, which is so good on financial inclusion metrics, I'm aware of the EPW articles and various articles which are coming up. Why can't they concentrate on this also? It's a bigger data set. It talks of index in a global way. They have surveyed 160 countries. I mean, it's equal to the total number minus a few. Method. Can we have a different method? That the senior academicians have to think. And I think for this institution of yours and ours, it's a country's institution, this becomes very important to statistically handle. Because, you know, except few countries in Europe, the world is also statistically not very sound. National data, yes. So therefore, critically, methodologically, they have to be seen and tested in the concentration of wealth scenario. You know, one thing is very clear in economics. Wealth, as Thomas Piketty has shown, and many others, Atkinson earlier, that share of the bottom of the pyramid is getting less and less, and concentration upwards is increasing. Had it been income, we would have taken a moderate view. Income, yes, he made effort. Wealth is deafening. And don't think of individual terms. No, if some people have become rich, one story. Businesses as entity have also shown this trend. That has to lead to a question which Paul Krugman asked, Nobel laureate, what is happening to investments there? The balance sheet of the boards have to be then analyzed, whether they are reinvesting or the whole money is getting encircled in different ways. Big issues. I'm not going to highlight much on this, but one thing is certain. Then the populist lobbies on ethics of prudence and fair competition. US Constitution said that antitrust means fair competition is the essence of their contribution. But is there equal opportunity in US really in financial inclusion? No. So fairness of competition is becoming very important. But simultaneously, the companies also need not go in loss. Peter Drucker wrote an excellent article, how revenue generation in firms is to take care of the future contingencies also. So all these aspects basically brings us to a new issue. Since there are 2 minutes, I'll only highlight one issue each from the next 3 slides. Now, my 9th slide is on competing on business data analytics. These words are fashionable, analytics. Instead of analysis, we say analytics. Good. Big data looks big, but understanding the structure of that data, nature of that data, how the data can be tamed is another thing. You require a scholar like Davenport. Davenport has written on it quite some time back. He says how to compete on the strength of big data analytics. But if you take a policy view, meta-policy view from me, there are 4 problems in data analytics, really, all over. One is the autonomy of experimentation. This is the point for Davenport. It's not my point. You can always goad a person to do data analysis in a particular way. He'll do it. He's your employee. Where will he go? But a good intellectual on data analytics would like to experiment. He will have 6, 7 experiments, models, and then he will decide on his own 1 or 2. So it's a matter of discourse, intense discourse, which is required. And then methodological rigor is also required. In India, there is a sad story. We have a National Statistical Commission. It has a brilliant manifesto. It's an act, legislation, piece of legislation, 2005. But its manifestos are excellent. Rangarajan committee was there. But are our data coming up in time? Are data on certain sectors coming up? Who weeps more than you people who actively look for data? But you're not only in the state of sorrow. Workers in the companies who are demanded data, they are consultants, for example, they are also in difficulty. So National Statistical Commission one more line is there. And here I would say blockchain is at advantage. I've already mentioned these aspects: coding of contract, audit and fraud detection, blockchain regulation, and central currency. Fintech's risk landscape, one document which has to be read by everybody. I don't know why. In fact, I attended that conference. I was representing India. Basel Committee report on sound practices for bank supervision and in case of other aspects. Document is old, 2008, but why people, 18, and why people have not read it? Their revised versions are also coming. They have to be read. An important thing to be noticed there is outsourcing and partnership risks. Reserve Bank of India recently has given instructions on outsourcing and partnerships. These are very important, has to be read. Staff training modules is not. Last, what is the crux of the matter I'm highlighting? Why have I spent and wasted or utilized 1 hour of your time? To tell you, as a senior citizen, as a concerned citizen, and a citizen with quite a lot of exposure in the field, that apart from the first three, which I have mentioned, inequalities of wealth, which I have highlighted, not just income, big fair competition. In India, this is not a big problem, it's happening. But again, trends are big business, the great G9, as they say in computer world, deciding, cooperating, but leaving few competition is there, is the fact that the state fails, market fails. There is no point for the state I'm saying, not government of India. State need not feel happy that, okay, market people are failing and we are saving them. No, you are saving means you are giving certain things, and those stabilizing measures, how poor, how quick, timely are they? This also the generation has to learn. Friends, in one sentence, my whole thesis is my happiness of being with you for an hour. I'm looking for institutions of business finance and technovation, banking and finance institutions like yours, to come up. You don't have the paucity of scarce resources of the University Grants Commission. You have money. You are doing well. If you have to come at the global level, we should be in a position, agenda-wise, in our curriculum, with our approach, to not only compete with the big powers, but also to take our students to a level in which their career, not of the first 8 years or 6 years, entire lifespan comes up. So 2008 era has spent a few years, exponential changes are there, but turbulence in the workplace is also important. What bothers me in the future of work is that my children and their children will be different on job security, even if they're of the same level intellectually or maybe higher. Because I had a pension career, I was not bothered about future. That is out of the scene. Now, there are tenurial appointments at will, at mercy. That curves quite a lot of my intellectual worth. But your children will have 11-month contract, and the demand will be that they learn, reskill, and equip themselves to the level with certificate courses, which means nothing. That is a problem. So long-term solution to the working population. Students are workers at rest, means they have been permitted to study, to work well. And that would depend on your institution, and you are a leading institution, so there's no problem. This way seminar was done, very good. I was listening to some of it, though I was in Bhubaneswar, and it was not possible all the time, but whatever I learned, I have gone to the synopsis also. It's very good. Only the scope requires to be widened a bit so that you're in tune with everything. India has an advantage, not only of youth, not only of democratic elections, it has the advantage of highly adoptive, conscientious manpower in academics. Only thing is teamwork, which is required, has to strengthen. Why should we not be, to repeat a point, a index of our own and depend on World Bank which we have criticized so many times, like Stiglitz. Thank you.
Thank you so much, sir, for your valuable insights and your kind words.
Can I say?
Sure, ma'am.
Yeah. Thank you, sir. It was indeed an insightful session. I have written 2 books I have to read in coming 2 months, which you have quoted. One is Future of Money and another is Knowledge and Self-Interest. I'll definitely make sure that I'll read both the books and subscribe few edition for the library, so my kids can also read the same. And I'm happy to know that a very good word which you have said for the students, like workers at rest, which I liked it. Actually, they are going to the industry. There are budding managers and they need to be updated with everything. So we'll definitely try to keep as an industry, as a university whole, Symbiosis International Deemed University as a whole, that will take care of our alumni who are working in the industry. We'll work for them. We'll keep them also upgraded. We'll do some programs so that they also feel connected and upgraded, as rightly said by you. And the Global Index database of World Bank, I'll definitely work on that also, read that also. So thank you for the insight. As a faculty, it was a huge learning to be a part of your session, sir.
Thank you. Thank you.
Over to you, Shobit and Pranjal.
Thank you, ma'am. Sir, we really thank you for your valuable insights and your wonderful and kind words. There are a lot of takeaways from this session, like the role of technology in finance and economics, as well as the proper integration of fintech into the banking sector. It is a pleasure to host you as well as listen to you, sir. Thank you so much.
Thank you. Some announcement has to be made?
Yes, Amitabh. So the best paper award announcement need to be made, and we want you to make that announcement. We have WhatsApped you also the name of the person and mailed you also, if you can announce.
Yes, I have it. I'm reading like
yes,
an announcer. As per the received evaluation, the paper titled Volatility Spillover During Russia-Ukraine War, Analysis of Volatility Index by Sheetal Gupta in track 2 has been recommended for the award.
Thank you, sir. Congratulations, Sheetal. Are you there?
Yes, ma'am, I'm there.
Yeah.